Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings before they make you lose your senses. Today we are diving into a report from ROLLINS INC, the people behind Orkin Pest Control. And believe me, some of the numbers they are throwing around are enough to make your skin crawl, but in a good way for them at least. We are looking at a Form 8K report. This is basically a company flashing a quick update to its investors about something important that has just happened. Think of it like a corporate bat signal. This report is dated February 19th, 2025, so this is pretty fresh information. The company we're talking about is ROLLINS INC. You might not recognize the name right away, but they own Orkin, the pest control people. Okay, here's the meat of the report. ROLLINS INC announced that they priced $500 million in senior notes. Senior notes are a type of debt. Think of them as a corporate IOU. ROLLINS is borrowing $500 million. These notes have an interest rate of 5.25%. That's the percentage ROLLINS has to pay back on top of the $500 million. It's like the fee for borrowing the money. These notes are due in 2035, meaning ROLLINS has until then to pay back the $500 million. To make the deal safer for the lenders, ROLLINS subsidiaries or smaller companies they own are guaranteeing the notes. This means if ROLLINS can't pay, these subsidiaries will step in. ROLLINS says they are going to use the money from these notes to pay off some other debts. Basically, they are taking out a new loan to pay off an old one. They are also looking at general company expenses, which may include dividends, share repurchases, buying other companies, and capital expenditures. Dividends are like a profit-sharing handout to shareholders. Share repurchases are when the company buys back its own stock, which can drive up the stock price. Acquisitions are when the company buys other companies to grow. Capital expenditures are investments in things like equipment or buildings. This part is just legal stuff saying that this report isn't an offer to sell the notes. It's just an announcement. And as required, they are attaching the press release they issued about all of this. So what does all of this mean? ROLLINS is taking on a significant amount of debt. Is that a smart move? It depends. On one hand, it shows that ROLLINS is confident in its future. They are willing to borrow money now to invest in growth. But on the other hand, debt is always a risk. If ROLLINS' business slows down, they could have trouble paying it back. Let's break down ROLLINS, the company. They are fundamentally a pest control business, heavily reliant on having field technicians service residential and commercial clients. Their revenue comes from repeat customers and new contracts. The report is signed by Kenneth Krause, Principal Financial Officer. Now let's step back and look at the bigger picture. ROLLINS is a solid company in a pretty stable industry. People will always need pest control no matter what the economy is doing. That gives them a bit of an edge, but that doesn't mean they are without risks. One big thing to watch is their debt. $500 million is a lot of money even for a company like ROLLINS. If interest rates go up or if their business hits a rough patch, that debt could become a burden. On the other hand, ROLLINS has a lot of opportunities. They could expand into new markets, buy up smaller pest control companies, or develop new services. The pest control industry is also becoming more tech-driven with things like remote monitoring and data analytics. If ROLLINS can stay ahead of the curve, they could see some serious growth. What about the stock? Well, it depends on what you think about those risks and opportunities. Based on their past performance and considering the current market conditions, a reasonable price range for ROLLINS would be somewhere between $35 and $40 per share. This valuation relies on factors like earnings multiples and anticipated growth rates. This range isn't a guarantee, of course. The market can be unpredictable and things can change quickly. Overall, I'd say I'm leaning slightly bullish on ROLLINS. They are a well-managed company in a good industry, and I think they have the potential for long-term growth. But that debt is something to keep an eye on, and I wouldn't go betting the house on it. The pest control business is here to stay, but with changes in technology and the risk of debt, we may see a shift in market share. Thanks for watching. If you found this breakdown helpful, please subscribe to Corporate Decoder for more simple analyses on complex reports.